In an effort to stabilise the ringgit, Bank Negara on Tuesday said that it will intervene in the foreign exchange market to stem currency movements that are deemed excessive. As the value of the ringgit will continue to remain market determined, the central bank expects the ongoing measures by the government to further strengthen the economy will help to ensure that the ringgit better reflects the country's fundamentals, said Financial Markets Committee and BNM Assistant Governor Adnan Zailani in a statement. The statement was released after the central bank's FMC held a meeting to discuss recent developments in financial markets affecting the ringgit exchange rate. In particular, the evolving market expectations of higher terminal interest rates in most major economies, which in turn raises the risk of a possible marked slowdown in the global economy. At the same time, the People's Bank of China had been cutting interest rates as there were signs that China's post-COVID-19 economic recovery was losing momentum. Besides, against the backdrop of the US dollar strength, the FMC noted that the extent of the ringgit's recent depreciation is not reflective of Malaysia's economic fundamentals. The FMC viewed the recent movements in the ringgit exchange rate to be excessive, taking into account a number of factors, namely that the country's growth momentum is expected to continue in 2023, albeit at a more moderate level after GDP recorded one of the highest growth rates in the world last year. The FMC also notes that while the ringgit volatility has risen consistently with those of regional currencies, the extent of the volatility increases have been disproportionately higher and deviating from historical relative movements. Notwithstanding this, the onshore financial markets remain on solid footing according to the FMC. Malaysia Building Society is targeting to deliver a high return on equity of 6 to 6.5% this year, up from 5.2% in 2022, even as the Islamic Commercial Bank faces margin pressure arising from increasing cost of funds, according to CEO Datuk Nur Azam M. Taib. Apart from rolling out in-house initiatives to cushion the margin pressure, CFO Ramanathan Raju told reporters that MBSB will also try to focus on increasing its current account saving account, which typically carries minimal to zero cost of funds. Ramanathan said the targeted ROE for this year does not include operations from Malaysian Industrial Development Finance or MIDF, which MBSB is in the midst of acquiring. On possible mergers after the one with MIDF, Nur Azam said his priority now is to focus on creating synergy between the two entities. Commenting on MBSB's operations this year, Nur Azam said management is projecting loan growth of 8 to 10%, driven mainly by agro-based corporate customers and affordable mortgages. MBSB's gross loans grew by 6.6% in 2022 to 38.56 billion from the 36.18 billion it reported in 2021. He says that the group is looking to increase its market share in corporate and property financing and expanding its footing in agriculture and food manufacturing. Nur Azam adds that due to MBSB's relatively higher exposure to the construction segment, the group's non-performing loan ratio is about 6.7% currently versus the industry average of about 2%. He says that MBSB is aiming to bring it down to below 4%. Tenaga Nasional and Electricity du Laos have signed a memorandum of understanding to explore the potential of hydropower in Laos, which is expected to generate returns of 460 million to 2.3 billion for TNB beginning from 2025. It also has the potential to increase cross-border electricity trade in ASEAN and assist Laos to become the battery of Asia, Bernama reports. The MOU was signed in conjunction with the two-day official visit of PM Datuk Sri Anwar Ibrahim, is also aimed at increasing Laos's electricity export to Malaysia through the Malaysia-Thailand-Laos tripartite cooperation. In addition to the MOU between TNB and EDL, Anwar, who is also Finance Minister, witnessed the signing of two memoranda of cooperation. The MOC involved Kereta Api Tanah Melayu and Lao Railway State Enterprise in rail transportation, as well as Mutiara Perlis and Tanah Lang Dry Port in inland port activities. The collaboration between KTM and LNR involves cooperation in rail transportation, including technology transfer and capacity building to LNR, and to develop a single ticketing platform to facilitate travel for passengers and cargo from Malaysia to Laos. It is expected that cargo from Malaysia to Laos would increase by 40% 20%, or 1.2 million tonnes in the first year, potentially reaching 2.4 million tonnes annually with revenue of 120 million per year. Private equity firm Creador has acquired a 40% stake in Malaysian pet food maker Pet World International for an undisclosed amount, it said in a statement. Creador bought the stake from both the founding family and Cope Private Equity, according to the statement. Founded in 2006 by entrepreneur Choi Peng Yu, PWI has grown to become the largest local pet food brand in Malaysia, with reputable brands such as Pro Diet, Pro Balance and Delicious in its portfolio, and is available at over 20,000 points of sale across the country. In 3 years, PWI's pet care segment grew at an impressive 27% CAGR, fueled by continuous product innovation and entrenched distribution network. Choi, who is also PWI's CEO, says the group is thrilled to be embarking on its next phase of growth alongside Creador, calling it a strategic alignment with a shared vision of prioritizing pet wellness and providing uncompromising pet nutrition. Creador founder and CEO Bramal Vasudevan said the firm is well positioned to leverage its regional expertise as well as M&A capabilities to help accelerate PWI's expansion. According to reports, PWI is planning an initial public offering in Singapore to raise up to $100 million, with a debut expected as early as late 2023. The Malaysian Research Accelerator for Technology and Innovation CEO of 4.5 years, Zulera Abu Bakar, will lead Malaysia's regional carrier SKS Airways as its corporate captain come September 15th, 2023. SKS said it appointed Zulera, currently serving her notice of resignation at MRANTI, as its CEO following an extensive search. According to SKS's press statement, current and acting CEO and Executive Director Datuk Rohman Ahmad will continue as ED after Zulera comes on board. Despite having her contract at MRANTI renewed early this year, Zulera says she is delighted at being appointed SKS CEO. She says that it is an interesting time to be in the aviation industry and she is excited by the vision the shareholders have for SKS, saying that it is ripe with potential. Roman says SKS is also delighted to welcome Zulera, who he describes as a transformative, purpose-driven leader with an excellent track record in the technology and innovation industry. SKS will be the first regional airline operating out of Sultan Abdul Aziz Shah Airport, with the arrival of its first two Embraer EI95 E2 jets in January 2024. Last month, SKS forged strategic partnerships with industry leaders Embraer Asia Pacific and Azora Aviation Holdings to lease 10 Embraer E195 E2 single-aisle jets in a deal worth more than $840 million from Azora.